Hello everybody. Well, so we've had a lot of requests for a video on my actual strategy that I utilize on a day-to-day basis, and for lack of a better word, this is just called the Dilly Gaff trading strategy. It's pretty simple. It comprises of a few elements, and I think what I'm going to do is just run through those elements for you first, and then we'll focus on how we utilize the strategy itself. So at a glance, you can see I've got sort of two oscillators, and I have three moving averages, and obviously I have fractals as well. And that's basically it. Okay. Obviously, I'm looking for trends and I'm looking for levels. So let's just start with the setup itself. So we've got pretty much a moving average crossover strategy, and you can use whatever moving average crossover you want to use. For me, I use a 33 and a 66. Okay, why 33 and why 66? The number 3 has got a lot of deep and meaningful meanings to a lot of people, and it is a third time lucky. There's a whole lot of things around the number 3. Just research number 3 and you'll understand why. So that's what I like to use. It's also a little bit more than a 20 moving average, so it's a little bit more than a 20-50 moving average crossover, so I tend to see a lot more validated entries with that crossover strategy. The second one that I have is a 150, which is this purple. Okay, so that's just quite simply a 155 moving average, and you can make it 150, 155, 140, it doesn't really matter, and I'm stealing that from Gann pretty much. So it's a 140 month cycle that he actually built his strategy on. But just if I apply that with some of the I almost said numerology, but some of the number theories that come out with the Ichimoku strategy, those three numbers that I've got there are typically sort of not exact, but they're in between of a number of the overall number strategies, number-based strategies out there. Okay, so it's a 33 EMA, it's a 66 EMA, and a 155 EMA. Those are the three moving averages. We'll get to how we utilize those shortly. Then we have something which is pretty much stolen off the Ichimoku strategy. I use two stochastics overlaid on each other. One is set to a 26 period and 5/5, this is normal settings, and the other one is a 9 period and a 5/5 as well. So for those of you who don't know what the 5/5 is, let's just get to the properties, and you'll see you have a period of 26, you've got a slowing of 5, and I've got a period of 5. Okay, and its method is simple. Both methods are simple for this. You can change them to exponential if you want to line up with your moving averages, but it's as you can see, it makes such a small difference, it's basically irrelevant. Okay, so that's it. And obviously then the fractals. If you don't have a fractal indicator, I suggest you find a charting platform that does give you the fractal indicator. It's kind of difficult to calculate them every time. You learn to eyeball them kind of, but it's much easier to have an indicator on your chart that says this is a fractal level, and that is pretty much what we look for. Okay, so to run through this, I am using the S&P 500 on a weekly time frame. Now, the strategy works on any time frame. I do find the hour, so anything from the 30-minute to the hour and above, basically it's a little bit more robust. So the 8-hour works pretty well as well, but I want to use the weekly just to highlight, because there's very clear levels on the weekly, and you'll pretty much understand where I'm coming from with my levels and my setup. So before we even start using the strategy, first thing we're looking for is a trend. Okay, and the trend here is down. So this is back in August 2000. So before any of you come up and say, oh, hindsight's a perfect science, says you've got to understand what happens in the past before you actually can start putting trades into the present. So first thing I'm looking for is a trend. What is a trend? Quite simple. That was a wrong line. Quite simple. I'm looking for a move in a direction. In this case, this trend is down. Okay. How do I validate the trend? Well, firstly, a break below the moving averages there. So the top one is obviously the 33. So that's our black level. And then the red moving average here is our 66. So there's a crossover and a retest. Okay. Now, what I'm looking for is a break of the trend. So previously, the trend was up. And I keep trading with the uptrend until I get validation. Now, validation for me is pin bars from a price action perspective. It is engulfing bars like that, and there's another engulfing bar, and then inside bars. There's an inside bar there. So there's a big previous bar and then fits inside the previous bar. Those are pretty much the only three things that I look at. I pay very careful attention to levels. Okay. Now the levels for me are a number of things. Firstly, the 155 is a key level, as you can see there. Price came down to it, touched it, bounced off it. We still, if you understand a moving crossover strategy, when the small moving average is above the, well, so when the slower moving average is underneath the faster moving average, so the 33, 66, the trend is up. When it crosses over, the trend is down. So what time frame do you use for those? It depends on your trading. So if you're looking to get in on for the long haul, so for example in this scenario, you were looking to capitalize on a big move and you could see things are happening, you'd basically be getting in with the shorts here and let them ride. Okay, so that's the first thing I look for, is a trend. The second thing I'm looking for is whether we are at the end of the trend or at the beginning of the trend. And how I do that is I use the stochastics for that. So when the stochastics are grouped to the downside, okay, that's not quite a good example, but they have crossed over here, they've touched the 20 level here. When they group down to the downside, we're pretty much at the beginning of the trend. And if you look at your moving averages are indicating a trend is up. That's a great opportunity to buy. So they would have been a great opportunity to buy. When my stochastics are grouped to the upside, I need to pay attention to the levels, and I also need to be wary that the trend may be coming to an end. And I stress the term may be, because the market can stay overbought or oversold for extended periods of time, and that's all the stochastic is telling you. What you need to understand is your levels, and so we're going to continue from this side on this downtrend. So firstly, a level to me is pretty simple. If I have a fractal, there's a fractal, and prices come past and prices come back up above it, that is a level. There it is there. And I think you see that in my daily videos. So you see there, it's not a fractal at this point. Price moves past. After these two bars, the fractal will be printed, and that's a fractal. It moves down. Now what I want to see is whether that level is defended. And you can see what happens here. We're above it, below it. We defend it, below it. Then we print another one. Okay, when price moves past this one, that is a valid level. So in this scenario, this is not a level. Okay, that's a level, a little bit lower. There is a level, and there is a level. And I'll just put one more, because now we're starting to get a little bit messy. But every single one, and this is a fairly strong level, because look there, you've had one almost there, 2, 3, 4, you've got a pin bar and a bounce off it there, you've got another bounce off it there, then we close below it, close below it, close below it. So that is a fairly significant level. While the moving averages are showing that it's an uptrend, there's no short here. There is definitely no short at all on offer. You should still be going with the trend. And ultimately, you should be getting stopped out when the trend changes. And that should be also one of your signals, but let's forget that at the moment. So what I'm looking for is a break below one of these levels. Okay, you can see we're going sideways here. So I want to look for a break below these levels and a retest that's successful. So we've broken below this level. And in fact, let me put one more in here, because technically that is also a level, because price moved past it. Right, so we move down, and this is on the weekly. So you're going to have lots of patience if you're trading the weekly, but you can see we move down, 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 down. Now we're below the moving averages. You can see buyers coming in. What I'm looking for is a retest of a level. Here is a level here. let's just line that up on that fractal, but you can see I'm missing a level here. So what I can do is just fine tune to the latest level. There's my fractal. There's where the selling happened on this week, and then immediately the next week opened, rallied up to test that level and started bouncing. At this stage it's still in an uptrend. We haven't had the moving average crossover, and we are above the 150, so that is my line in the sand. We move down, we test the 150. Remember, the 150 is another level, and here we start having a crossover with a pin bar. That there is a valid signal, and I just want to make this a little bit bigger. I want it like that. There we go. Okay, so double click it. That is a valid signal. Why? We've got a moving average crossover. We have moved back to test the level. This is a level here. You can see lots of fractals here. And what I could actually do, and what I often do, you'll see me do it often in the video, is I look for two levels. There's another one down there. Okay, so I normally look for two levels like that, and you can see where I'm picking it up. There's my swing high. There's another swing high. There's a swing high. There's another one there. So that's 4 fractals in that zone. That's a fairly good level. We rejected it here, although we haven't had a moving average crossover. We bounced off this level, and that is a valid signal. Right, so there's my first short. Once price action starts indicating that we are starting to get buyers, and there was a sort of a fake out there, so long as we stayed below the 155, everything was fine. We came back down here, and you can see the buyer stepping in here. And if you look to the left, there would have been levels, but I'm not going to go back like that. We're going to move forward now. So here we come up to test. Now you can see we've had the crossover. So technically, the trend has reversed. What I'm looking for is a retest of a level. Now I'm going to use these levels so we don't get too busy. If you look to the left, you can see there's a lot of interaction here. So draw my levels. Price did come past. You see with this bar here, price came past. So everything there is a level. This here is not a level. These two here are not a level. Price has not broken it and tested it yet, or tried to test it. So the levels are stuck here. So you can see we fly through the level here. I know it's moving down. I know price is going to be doing this kind of price action all the time, and comes back up, tests the levels, and there's multiple levels here. You can see every single fractal is a level, and you need to pay attention to every single one of them. Now the beauty about this is, if you've got 4 levels here, I know my stop should be above the highest level. The trend is down, moving average is there. The probability of it flying past is low. It can happen. Something could happen in the world that makes it reverse direction very quickly and carry on up. And then also you've got to pay attention to your oscillators. So you can see at this point here where it dropped, look at my oscillators, they're all grouped to the downside. So that's telling me, and I need to watch out. We're at a level, probably buyers coming in. And the other thing is you're far away from the moving averages. I want to stay as close to moving averages as possible. There you see we come back up and it moves down. Right, so you can see off every level, the minute we break through a level, and here's another fairly good level, you can see we tested it 3 times. A lot of people would be saying, oh, here's a potential head and shoulders forming, this is what's happening. Problem with that theory, especially on the higher time frames like the weekly, the trend is solid, the downside. Look at all my moving averages. I've had a faster moving average crossover, so I've had a 33.66 crossover, and I've had a 155 crossover of the 33 and the 66. Okay, that, when you see that kind of setup there, that's in a defined, well-defined downtrend. You should only be looking for shorts. So every pullback needs to be sold in until you get the crossovers. Okay, now remember, oscillators are not to indicate that the trend has changed. They're indicating that you're coming up to a potential big level that you may get buyers or sellers in. Okay, so let's just move on a little bit. Now you can see we have moved past, you see a bit of price action here. So now this is where price action will always play a role. When you've got 3 touches down here, looks like a double bottom, and the Dow, the S&P and the DAX do this often, is they form this kind of pattern here, right? And when they form this kind of double bottom pattern, which is normally a Bollinger, if you sort of a Bollinger W bottom as well, you'll notice that this will probably be out the Bollinger, this will be inside the Bollinger. But then typically what happens is, more often than not, it comes back for a third time. And the principle of third time lucky, unlucky is very, very high on the US markets for me. There's another one there. 1, 2, 3 attempts and then failed, so it's third time unlucky, down. 1, 2, 3 attempts, and then just take one of these levels here. I clear the previous high here, and I need to take that double bottom into play because we never broke below this, so it's still valid double bottom. And you can see break up, retest, 1, 2 retests, and then we start moving off that level. So the key here is these levels. You see me draw those levels in every morning on my charts, and I do try to keep the charts clean and then draw them in so you can see what I'm trying to do. But that is pretty much the science behind the levels. When we are below the 150, 155, I am very wary of price because often it can bounce off that. So in this little area here, even though we'd had a crossover, and because of the moving average, the oscillators here, the stochastics, you can see how they group well above the 80 at the moment. That is indicating to me I need to be careful. Something's not kosher. Something may fall to the downside. And so it's fine being careful. The position size gets smaller and your stop loss just gets closer. But it can also run away from it like it did here. Okay, so levels are so important. I think of this entire strategy, levels are the key to it. The oscillators are there just to show you where you're overbought and oversold, and you need to look for the levels that are close to where price is at the moment, because you can expect some price action around there. It's an indicator, so it is not something that you say, oh, they're grouped to the downside or the upside, I'm buying. The only time you're going to do that is when you're in a well-defined trend. And we'll look at that now in the current market conditions right now. Right, so I hope you've got that. Moving averages, it's a simple moving average crossover, and these are just, again, indicators to tell me whether I'm on the right side or the wrong side of a trend. So if I was short up here because I'm anticipating this to continue, that's the wrong thing to be. Look at all the moving averages. They're all pointing up. Prices testing. There it tests the 150. You can see it tests the 1.5 there, tested it again, test it again here. And I can run all the way through this, and you can see what price does. Around the 150 here, we have a reversal here. We attempt to test it there, we don't. Here we test it again, we break above it, break below it, break above it, and look at how we're rejecting it here, and then eventually move above. Same thing happens here. Okay, now you can see a very strong uptrend here, and I've kept some of those levels in on purpose because you can see it happened well in the past. So those levels happened where? So some of these are from 2005. Okay, so some of these here 2005, and if I go back even further, some of them are from 2002, some of them are from 1997. Okay, so if I come back to here, look at how those levels in the past are respected. Look at that bounce there. Beautiful price action. So this here is a great example of a long-term long entry. When the oscillators, they do this kind of crossover, so when they're far apart and they cross, they turn like this, that is an indication that you have a big move coming. There's another one there. And more often than not, the groupings at the downside like this, when you're in an uptrend, just indicating you do have an opportunity to buy into it. But when they do this kind of thing, it's normally a pretty violent move to the upside. The other thing that you use these oscillators for is diversions as well. So you can see there is a low, a lower low, price is low, but price is high. So price is moving up, but the oscillator is moving down. That's another signal that's telling you there is a big move about to happen. And we're on the weekly, bear that in mind. So it does give you an idea of what's going on. Even in this this bar here, which was, that was 580 points, 4% move, which was pretty big back in the day in 2011 area. Not so big nowadays, but that kind of pullback onto it, pullback onto structure, buyers stepped in on the structure, and if you look on the lower time frames, you'll see that you could have fine-tuned this level to the lower time frames, and you would have found the opportunity to buy into that, and left it for a couple of weeks. Okay, so that kind of the strategy I utilized. Now you can see oscillators group the upside above the moving averages right now. The trend is solid to the upside. I'm only looking for opportunities to buy. But the problem with this kind of setup on the weekly is I don't think I'd be wanting to hold for an extended period of time, because the weekly is looking very much oversold. So what I'd want to be doing is going down to lower time frames and intraday trading, just trading with the trend. Wait for the pullback, buy in, sell out at the next level. Wait for the pullback, buy in, sell out at the next level. Right, so I'm just going to delete all those, delete all that noise quickly, and now we're going to come to the last 2 years. So you can see here, let's just look at price action itself. We were making new highs. There were no levels technically to the left, because price has never been this high before as what it was here before it fell. So the levels are all down in this area. So if we just start putting the fractals in here, and this is a great example of when, you know, levels do need to be tested. And the top fractals and bottom fractals are all valid signals. Okay, so while price is moving up, this is not a level. Sorry, this is a level. These bottom ones are not levels. Clearly doing this pretty early in the morning, so we need some coffee, I think. So let's just start that again. So basically that is a level. We've broken through it, so price has gone past it, so it's a level. This down the bottom, that's a level, but this one here, this tail here, that's not a level. You can see buyers did step in here at the close of the week, but if you look further to the left, you'll see, if you just fine tune a little bit, that's a level. And that's pretty much what the buyers looked for. You can see it was rejected there as well. Now this is a level. So now I can fine tune that. As price moves past, it validates these fractals to the left. So you can see here we had a pretty big range. Then you've got to ask yourself, why did the buyers step in here? What did they see at this point? Okay, there was a lot of political noise, well, not political noise, but reserve bank noise at that time as well. But they would have known about the noise, but then they would have been looking for the best area to get into. And you can see what I'm doing here is I'm just lining up all these fractals here. Okay, you can see prices move past these ones. So this is the one that they'd be looking at. There it is there, just a little bit short. But if you fine tune it a little bit higher to there, you can see there's my fractal. Look what happened. So my comment on looking left and making sure that you understand what is happening on the left is very, very important, ladies and gents. If you don't know what's happening to the left, there's no ways you're going to know where your levels are. So this fall in March was massive. Yes, it was massive. You would have expected some support here. I mean, I know I was looking for support here and got burnt there. I then looked at this level, got burnt there. Left this week very bloody. Then we had a bit of a rally up, and then we rejected that area there. But have a look at the moving averages. They never crossed. We were very far from the 150 as well. We didn't even test the 155. On the way up again, we tested it twice. You can see that. And when you get this kind of violent move on any time frame that just flies past all the moving averages, flies past the big levels that you think are the ones to look out for, what you do is you go to the higher time frame straight away, look for the next big levels and wait at those levels, because you can see, you just know it's going to come back up. The trend is up. The fact that we've moved below it is irrelevant. We need to wait for the retest and then the trend reverses. So the trend is still up, so you should still be looking for opportunities to buy, even with a big move like this. And this is where your psychology comes to play. So if you look at what's happening right now, we have a major grouping right here. And if you look at that, I think we are... We're kind of pretty close to the 100 on the stochastics at the moment. So you can see we are right here, 94.7, and the other one is 98.39 on the weekly. That is telling us that we can still keep going up. There's no two ways about that. I mean, look what happened here. You can see we carried on going up. But then we had this crossover here, and we still carried on going up. So price was going up. This was starting to move down, diversion. So there was already a signal there saying something's about to happen. And that's the problem with my strategy as such, is I'm not looking to go against the trend. I'm only looking to go with the trend. So all that this is telling me is be careful, keep your stops tight, because there's going to be a pullback, and I want to be buying at the pullback. So this would have hurt, and it did hurt. I had a few losing trades here, but then I recovered all of it and more by basically just staying with the trend all the way up. And that's why a lot of people that to argue with me and say that going up and down and you need to be able to trade up and down. Cool. There's lots of people that can do that. My strategy is quite simple. I go with the trend. I like to stay with the trend, and I also like to just keep myself calm, and I'm not interested in the stress around that. So if we just clear the chart again and run through this one more time, but now I'm going to come down to the time frames I use in the video. So you can see even through this week, I'm still calling longs. Why am I calling long? We've had a grouping crossover, but now look what's happened. We've had a crossover there, and we're busy with another crossover here. This here is telling me that we have another potential move up. Let's look at my levels, and I think this morning we called a couple of these levels in this morning's video. So there's my level, this is my fractal. Price came past it, came back to test it. 1, 2, 3, 4 times. So I would say that this is being protected. And if I look at the oscillators, it's telling me that there's an opportunity that I need to be looking for. Looking at price action is telling me that nothing's really happening. It's barbed wire, but that's another discussion for another day. Right now, I'm looking for opportunities to buy. But let's just come back a little bit in time here. So we had this big move. I think you remember this move in September where we moved down, moved up. This is like a 400-point move down, up, down, pretty much a range. Above and below the moving averages. I mean, in the Bill Williams strategy, they call it the alligator sleeping. With your Bollinger Bands, you'll be in a Bollinger Band, and it'll start getting a Bollinger Squeeze. There's a whole lot of little different strategies that are just highlighting the same thing. Bottom line for me is, for as long as we are above the 155, my trend is up. For as long as we're below it, trend is down. So here is a potential downtrend. I'm looking to sell at this point because look, everything's crossed over. Looking to sell, and we get a bounce above the moving averages. Then we get a crossover. Now I'm looking to buy, but I want to buy the pullbacks. Where are the pullbacks? Pullbacks will be off levels. So the first level is this one here. As we move past it, that validates it. I want to pull back. We didn't pull back. We came back there, and we're still flirting with it. And then we get to this point here where we stick to the trend. And now you can see the 33 moving average. You can see how the buying is happening off that. Occasionally we drop lower down, we drop to different levels, and all I do every time we move past, put the level in. There's my level. I've moved past, comes back, and I test it. Now, one thing about level testing, if we use, let's just clean this up, delete that one. So this level here at 36.16 or 36.17, there's my fractal there. It was validated with that squirt below it. And you can see there's more interaction, not perfect, but it's a lot of interaction around there. So that was a level, and it's probably a level in the past somewhere. Would it be? I think I'm talking crap. Sorry, that's definitely not going to be a level in the past because we're at all-time highs. So it on a lower time frame, you would probably see there'd be level somewhere in here. It was tested there successfully. That's not a successful test. That's a break below it. It's been violated. I want to see a successful test. So there it goes up, 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 up. Nice big drop. That's a successful test. That's an opportunity to buy into it. And here you can see back down to 66. And I mean, I'm saying the same thing over and over again, but that's how simple this is. Levels are there. And you can see this level here was not really tested. So close below, then that test missed and that test missed. So that level is kind of open. And I think that's 36.60. And if you remember back last year, we were playing with that for quite some time. Okay, so let's just drop down one more layer to the 1 hour now, and that is sideways. But which way is the trend? We're above the 150. Look at that test of the 150. Look at that test of the 150. Now, even if you start seeing a massive rally down, you can put a limit order down here on the 150. You're normally going to have a bounce. And if you're not going to have a bounce, there'll be a level close by. Like there's one. There's one. And there'll be one inside there. And there's your levels. And you can see how that inside tail there was exactly what they were looking for. And you often hear me talk about above and below the moving average, complete confusion. Here's a great example. We haven't had a crossover yet. Well below the moving average, opportunity to buy down here to come back for the retest. And the retest was all over the place, but then you had the crossover inside here, and then going into close, a nice solid bar. You wake up the next morning, you've got opportunity to buy, but you don't want to hold it for long because look at the oscillators. Occasionally on the 1 hour you are going to get 3 or 4 days of an uptrend or a downtrend. But bear in mind, when you're looking at the higher time frames, which is where I take my trend off, I take my trend off the 8 hour, then I come down to the 1 hour to look for my opportunities to buy, not to sell. This is an uptrend. It's been an uptrend since, well, this was technically still an uptrend, so it's been an uptrend since, when did we switch? March, in this area here, so towards April, end of April, beginning of May has been an uptrend. So there's no reason to be selling this. Even this year, until it's, if this rejection here had happened, that would have been a reversal for me, and that trend would have changed. But this to me is just a consolidation pattern, second consolidation pattern for a continuation. Okay, so that's kind of the way that I do this. That's my strategy. That's how I try to keep it simple. I focus on the levels. I focus on fractals. Fractals are very key to me, and I focus on the trend. The rest of the moving averages and oscillators are really just indicators to highlight and remind me where I need to be careful and where I can actually look for really good opportunity to buy into this. And as I say, this works on any time frame. If you look at the 15 minutes, because I suppose this last period is not really conducive to it, but here you can see massive move up, pullback, buyers stepping in, moving averages pointing up, waiting for the oscillators to come back down, looking at price action, great opportunity to buy. And you could have just bought, you could have bought here again until you start breaking below like there. Still wait for it, but that would be cautious. Move to a higher time frame and look what's happening. Okay, I can even move it down to the 5 minutes if we have to. And right now, what's happening at the moment, the trend is up. There's no reason to be looking for shorts. I can move it to the 1 minute if I want to, although I don't recommend it. You can see it gets a little bit violent, but the principle stays exactly the same. Oscillators above the moving averages, great opportunity to buy over here, and great reward. Starts getting a little bit haywire around here, sell out of it. Okay, I don't recommend that. Don't do that. Rather stick to the 15, 30, 1 hour, 2 hour even. The 2 hour it becomes clearer. You can see as I go up the time frames, the clearer it becomes. The 3 hour, and you've noticed on my videos I do use the 3 hour quite a lot, because that also gives me an indication of a short-term trend. Great opportunity to buy here, which is what we did buy, and we've been buying on these pullbacks here at the moment, but some of them haven't worked out. Some of them have been a little bit hairy, but it shouldn't be worrying because the trend is up. So if we buy down here, just wait. It looks like you've got to take profit up here, wait for a pullback, keep going with the trend. Okay, anyway guys, I'm getting a bit long-winded now, so that's the simplicity of it. Follow the trend, draw in your levels. A level is not in the true sense of, or support and resistance, not in the true sense of like everybody else wants you to believe. Although, if you do look left, you'll probably find when people say they're targeting, so for example, they're targeting this tail here for a pullback. Granted, somewhere in the left, that was a level. But rather, set your own mind at ease. And there's my level there, because price has gone past it. None of these, or these two are a level, but this one is not a level. That tail is not a level, because price has not gone past it. So look a little bit further to the left. Keep looking to the left, and you'll see what it does, and then you can actually take it from there. Okay, if you've got questions, drop them in the comments, and I will address them for you. If there's something that's not clear, just tell me in the comments, and I'll put out another video for you. But that, in essence, is how I use it. I know in my my daily reviews, I don't have all the moving averages on. I just like to keep the charts clean for that. That's part of my review process, so I can see price action and levels. So it forces me to focus on price action and levels. And then when I start trading, this is the kind of the view that I look at. In fact, I can show you exactly what my view looks like. Oh no, this is not the one. There we go. So that's kind of how my charts are set. So I can see exactly what's going on. The white space is when I've got my markets open and my trade boxes open. But that's pretty much what I do. I can watch 4 instruments at the same time. You can see the exact same setup. And that's how I do it. Okay, anyway guys, that's it for me. I hope it helps you. I hope it gives you some clarity. As I say, if you've got questions, just fire them away and I will get to them for you. All the best. I hope it helps, and stay safe, and always keep those stops really tight, and enjoy the rest of your day wherever you're watching this from. Cheers for now.